This is the real estate death blow a very small fraction of people will have to deal with, unfortunately. It's like a trifecta of the prices coming down, rates going up, and the triggering that will cause some people to lose hundreds of thousands of dollars in a liquidation event. Look, this isn't a fun topic that I want to talk about, nor is it meant to invoke fear. But the reason why I'm putting this video together is because I want to draw some awareness to some who may be in this real estate death blow situation, but for whatever reason, just don't realize it, right? I've spoken to a lot of people on the phone recently about their situation, and something of this manner seems to keep coming up more often than I would like it to. So if you find yourself in a sticky situation or something similar to this real estate death blow I'm about to explain to you, it's better that you understand and go on the defensive immediately than to kind of wait and pray for a miracle, because I don't think that's happening anytime in the short-term future. And you can learn about some of these defensive moves from me by booking a strategy call using the link on the screen right here. It's www.chatwithzen.com. Simply click on the date and a time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zen, and I run a Remax brokerage in the Greater Toronto area, in addition to making awesome real estate content videos like this for you. As I've said in the intro, this is the real estate death blow that could wreck some people financially. It's an unfortunate thing. Look, I'm not going to get into how some people got here, but I'm just going to go and talk about the symptoms that some are probably experiencing before the death blow to whoever it is that experiences this financially. And I'll go through each of the trifecta, and if you feel at some point you're having some of these symptoms and can identify with this, get on the defensive now and figure out alternatives immediately. Again, if you want to book a call with me using the link on the screen right here, be my guest. I'm more than happy to point you in some direction to help you get on the defensive or give you some of the strategies I may have. Now, the first of the trifecta is negative equity. Negative equity is when you bought the property for something and it's now worth less than what you bought it for. Now, this is a very common symptom for anyone who has transacted in the real estate market, call it in the last year or so, right? So dating back to summer 2021. And this is especially true and super especially if you bought pre-construction in a low rise, meaning ground level pre-construction. While it is common in a slumping market to have negative carry, if you have the means to carry your new mortgage, assuming you have one, or are like cash flow positive or neutral if you're an investor, you're fine. You're automatically out of the real estate death blow. So if you're wondering how many people are affected by the negative equity, a very simple calculation I use would be the total amount of sales in the Greater Toronto area in the last year. So since summer last year, we're about 170,000 since January 2021. Then you divide that by the total GTA households, which by this is like 2.1 mil, which puts us a little bit shy of 8% of households have transacted roughly, which is some amount, but not as much. For everyone who freaks out about how the world will blow up because of higher rates, you have to understand that half the houses in Canada don't have a mortgage. So negative equity and higher rates are irrelevant even in the 8% cohort. It's just how many people have a mortgage, right? So this 8% number is likely higher than what it actually is. But nonetheless, let's carry on to the second part of the trifecta of the real estate death blow, the debt servicing and trigger rate. So debt servicing is basically a fancy financial term for can you pay off your debts and your loans. If a Canadian is to default on their debt, the mortgage will probably be the last thing that they default on. And at the moment, there aren't any systemic issues or any signs of it just yet. And you can see with the chart over here. However, what could prove to be a problem is the static variable mortgage payments that will jump due to the trigger rate. Now, if you don't know what the heck this is, and it sounds very technical, I go explain this in depth in a video up here. You can check that out. Essentially, most people with a variable mortgage haven't really felt the higher interest rate hikes from the Bank of Canada just yet. And this is because their monthly payments are static. It hasn't moved. However, most of the trigger rates will likely trigger if and when we get a rate hike come September 7th, which is the next announcement date, which could increase a lot of people's mortgage, again, if they have one in that 8% cohort, by a pretty significant amount. Now, these numbers over here aren't 100% accurate, but they are a depiction and an illustration of what could be coming, and to show you the potential magnitude of the payment increases. Just look over here. And you can see that the new increased payment on a mortgage that's about $500,000 is $700 a month, or $1,400 a month if it's $1 million mortgage. So this means that if you have a mortgage at CIBC, RBC, TD, BMO, you're likely in this camp with a variable mortgage. So if you think these new payments can affect you and you have a mortgage at one of these banks, you could be affected by the second trifecta of the real estate death blow. Now, if you found this content useful, it means some other person probably will as well. So make sure I help you spread the knowledge by smashing that like button. And again, you can just share with those people out there. And remember, I'm putting this information out there because I've spoken to too many people who don't really understand the financial kind of plumbing of how the real estate market works and could be in for a shocker in the near-term future, especially come September 7th. So if you think someone you know, especially someone you love and care about, is potentially in these situations, share this video with them. And while you're at it, ask them to like and subscribe too, please. Because we're almost at 10,000 subscribers, and I'll do something special to celebrate that milestone because I do think it's a big milestone, and I do thank you for kind of helping me get there. Now, the third trifecta is the no equity forced sales. It sounds absolutely terrible already just thinking about it. This part is absolutely brutal, and allow me to explain. So if you bought a property for, say, $1 million and you're forced to sell because the monthly payment increase from the second trifecta is really significant and you can't service that debt, and now you're forced to sell at a much lower price than what you bought it for, you've essentially lost a lot of money. Have a look at this chart I've created for you over here. So if you bought that $1 million property with 20% down payment after selling it with a 15% drop in price, which by the way, we've experienced so far in the Greater Toronto area, you'll end up with $50,000 before transaction costs, such as realtor fees, commissions, professional fees, and whatever, right? For a total net loss of about like 185 grand or so. Now, the initial investment in the calculation is inclusive of land transfer tax. So in this particular situation, you're out of the market, but you're not bankrupt and you have about 50 grand and you can go rent, right? Rough lesson to learn, but not the end of the world. Some would argue this is a death blow. It's close, but it's not quite there. Now, if you bought with minimum down payment, this is the death blow to you. Again, look at the numbers here. If you bought with 7.5% down payment, which is the absolute minimum on a 99 property, you have a mortgage balance of about $960,000. If you sell with negative 15% equity, your proceeds are negative $111,000. Negative. Do you know what that means? It means you have to pay the bank after selling the property. Yeah, you heard me right. You have to pay the bank after you sell your property because you don't have enough proceeds to pay off the mortgage you owe the bank. That is the real estate death blow. All in, you'll be out $222,000, give or take. But if you can't even pay off that $111,000 or $111,000 you owe to the bank, we have to go down the consumer insolvency or bankruptcy route, which is brutal. Then you could be out of the market for a very, very, very long time. And if you're wondering about the whole CMHC insurance thingy, you have to remember that insurance is for the benefit of the lender, your bank. Meaning that if you don't pay and you default, they, the bank, get back the money that they lent to you. You are not protected. Mortgages are backstopped by the government, and when they're under 20%, and you as the buyer, because you had less than 20%, are the one that pays for the insurance policy premium on that backstop. So if you understand what I mean by the real estate death blow and you find yourself in this sticky situation or coming close to it, immediately get on the defensive. Remember, a recession could mean rates drop. It may not trigger your trigger rate, but it could very likely also mean you be losing your job, making the real estate death blow happen much faster. Rates dropping aren't going to fix all of these right away. And while I think a very, very, very small percentage of people are actually in this real estate death blow situation, this is to illustrate to you what a slumping market can do if you're not prepared. Again, this is not meant to invoke fear, but to give you an idea of what some of these cascading effects from the government fiscal policy, monetary policy side are having, what kind of effect they're having on real people. So if you find yourself in this situation or think you're coming up to the real estate death blow and want to figure out how to get on the defensive, you can book a call with me using the link right here. It's www.chatwithzen.com. Hopefully you found this helpful. And again, not to invoke fear into you, but just to give you some advanced information of what I can see coming down the pipeline if you find yourself in this situation. Until next time, your move, your future. See ya. Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch them both.